Hello and welcome back to my channel. I'm Juliette, I'm a chartered accountant and a property investor. In this video, I want to share with you how to be tax efficient in property. As property investors, we want to be serious on income tax, capital gain tax, and inheritance tax. Before we even crack on with any of those, I want you to write down the following two important rules. First of all, never ever sell your investment property. And second, as the property goes up in value, increase your debt against it. If you feel a bit nervous about this last one, please have a look at my video on good debt and bad debt to understand why there is nothing to worry about it. Please remember to like this video if you enjoy it and you feel like you learned something, and subscribe to my channel if you haven't done it yet. Let's look at capital gain. Let's imagine we have two identical persons, John and Emma. They are identical in every way. Identical job, identical income for the next 15 years, same age, and they buy the same identical semi-detached property next to each other for £100,000. On average, house value doubles up every 8 years in the UK. But let's be conservative and say it takes 15 years to double. In 15 years' time, the house John and Emma bought will have a value of £200,000. And in 15 years after that, it will be worth £400,000. John does not sell his house, but Emma does. Let's see what happens to each other. Emma sells her house and the government tells her she needs to pay capital gain taxes on the sale. She's a 40% taxpayer and therefore she needs to pay 28% of tax. That's 84,000 of tax bill. She sells the house for 400,000. She pays the tax bill, the estate agent, the solicitors, and then she is left with about £300,000. John, on the other hand, he heard me saying never ever sell your property investment, and he decided to remortgage. He borrows 75% of the value for 100,000. That's £300,000. John borrowed £300,000 from the bank, and both Emma and John have now £300,000 in the bank. The difference is that Emma doesn't have a house anymore, while John still owns a house. And what is going to happen in 15 years' time? John still owns a house, and the house value would have doubled. It will be worth £800,000. And the next 15 years after that, the house will be worth 1.6 million. Because Emma sold her house, she's just missing out on 1.2 million growth of growth. Never ever sell your investment property. Take them to the grave with you. Die owning them. On my death, the capital gain gets written off. No one has to pay for it. I will tell you more about inheritance tax on my next video, but there is no capital gain to pay. I really hope you enjoyed this video and learned something new. If you are looking to start your property investment journey, or if you have money but no time or experience, please feel free to reach out and I will be happy to help. Thank you and see you soon.